What's going on, my fellow wealth creators? Matty Ice here. In this video, we are going to break down some comments. Have some fun in the best part of the internet, which is the comment section of any social media platform. It's always a really good time. But I actually had a really good back and forth with somebody in the comment section on a video that I watched from Better Wealth and the Better Wealth channel. It was a really good interview, and there was something that was brought up in the comment section that was just incorrect. And so I addressed it, and that's when a conversation started to begin. But there's a lot of just misleading things that are being said about whole life insurance that I think are important to address, because how do you, I say this all the time on my channel, guys, how do you know if something is good for you, is right for your financial situation, if you don't do the research, if you don't understand how they actually work, or worse yet, what if you have the wrong information about that financial product? How can you make an informed decision without having all of the information, all the facts about how these things work? And I just know that, like, just based on my experience with dividend paying whole life insurance and how amazing it's been and powerful it's been in my life, I want to share it with people. And I know at the end of the day, it's not going to be right for everybody, and that's totally fine. But I want you to make informed decisions, and you can only do that if you have the right information. So even though obviously this person and I disagreed quite a bit in the comment section, I think these are some of the best videos to watch, because you start to hear both sides of the story. You hear the arguments on both sides, and it's very useful when it comes to making a decision about whether or not something is right for you. Okay. And to be clear again, I think sometimes too, people get stuck on the mindset of, like, when it comes to dividend paying whole life insurance, about how it's a terrible investment, horrible place to put your money. It's way more expensive than term insurance. And oftentimes people are talking about traditional whole life policies. That's not what I talk about on my channel anyways. That's certainly not what I set up with my two policies. We are talking about custom designed dividend paying whole life insurance with a mutually owned life insurance company that has been in business for over 100 years, has never missed a dividend payment. Those are the types of policies, like, set up for early high cash value, where we have access to the majority of our money right off the bat, right? That's what I'm talking about on my channel, and whenever I'm talking about dividend paying whole life, because these things are just absolutely incredible. So what I want to do is take you through the comments here, because it's pretty funny at the end. He said that whole life insurance is like the timeshare of financial products, which is interesting, because timeshares are pretty awful. I've never really heard a good thing about timeshares. I'm sure some people enjoy timeshares, but I've never heard good things about it. But yeah, whole life is like not even close to being compared to something like that, because again, set up correctly, it can be really, really awesome. So yeah, we're gonna address the timeshare comment, but like I said, there's some really good stuff in here that I think is going to be very beneficial for you guys. So let me share my screen. I'm going to go through the comment section, and then obviously I'm going to take you through my policy as well, because there's some specific things that I want you to see with my policy, so you can see just how powerful these things are. But let's see if dividend paying whole life is the timeshare of the financial products. And here's the thing, like, I poke fun at all kinds of financial products myself and call them names. Like the stock market, to me, I call that the Wall Street casino. IUL, that's the pigsty of financial products, right? I came up with that when agents will tell me, oh, well, you just got to, the IUL wasn't designed correctly. But the problem is, like, you can design a pigsty all you want. It's still a pigsty. IUL is the same thing. You can design it however you want. But if the life insurance company changes all these different things, you don't fund it properly, whatever, then, it's going to be it can blow up in your face and be a disaster. But so the name calling about it, I don't care about that. It's just kind of funny. But yeah, let's have some fun here. Let me start with, so this is the video. Infinite Banking Skeptic challenges me. This is from the Better Wealth podcast. Definitely recommend subscribing. Shout out to these guys. They do an awesome job, have really good guests on and really good conversation. So make sure you check them out. Here's the comment that I responded to. So this person said, my final thought is whole life insurance is there's zero transparency on the fees and expenses that you have to pay on the lifetime of the insurance. If you want agents to swindle you out of money for their vacations, buy whole life insurance. Obviously, this is just absolutely ridiculous. So here's the thing. And what I said was that this was completely inaccurate, because everything you see on a whole life illustration is net of all those fees and expenses. So oftentimes when people bring up the lack of transparency in a whole life policy, they're usually saying that's a bad thing and a benefit of like a universal life policy or an IUL, because all of the fees and expenses are broken down. Do you know why that is? It's because they can all change. They have to make you aware of that. versus with a whole life policy, everything is guaranteed level. Your costs don't change. The fees, expenses, none of that changes. Everything is locked in, guaranteed for the life of the policy. And also the numbers that you're looking at are their net of all of those fees and expenses. So that's basically what I said, is that everything is net. And when it's designed for cash value, with regards to fees and expenses, like if you don't like the net numbers after fees and expenses, then don't buy it. Right. But there's no surprises. There's nothing that's going to change in the contract all of a sudden. Like your expenses and cost of insurance aren't going to, skyrocket like it does in an index universal life policy. Your cost of insurance goes up every single year. So they have to make those types of things aware. But the lack of transparency, like you don't really need to know what the fees and expenses are because it's all net. And if you don't like the numbers net, don't buy it. That's my opinion anyways. But with regards to it's like the commissions argument is always fun to bring up, because people are like, oh, agents only do it for the commissions and stuff. And this is just, again, absolutely ridiculous, because number one, like I point out here, when it's designed for high cash value, the agent takes a huge hit on their vacation commission, like they suggested, just so you know. So which is true. Like when you design these policies for high cash value, what you're doing is you're lowering the base premium, you're increasing paid up additions, and the majority of the commission that an agent makes comes from the base premium. So if I'm lowering that base premium, what am I doing to my commission? I'm lowering my commission. It takes a huge hit when it's designed for cash value. So I don't really know what you're talking about. That's number one. Number two, the fees and commissions that you pay on traditional financial products or mainstream financial products like your 401k, these mutual funds, like I just did a video on this, guys. The numbers are staggering. Like you're going to pay so much more in fees, commissions, expenses, etc. with those types of like asset under management products than you'll ever pay on a whole life. Well, I don't want to say ever pay, because there are people that don't design whole life policies for high cash value and it's max commission to the agent. Unfortunately, I see that very frequently. It is very sad. And I would agree with you on that. When agents are, like when it comes to the commission side of the argument, if they're doing it for their commission and not the benefit of the client, that is absolutely a problem. And that needs to be addressed. But when you're doing this right, commission is significantly lowered, and you're going to pay far more in commissions and fees on that 1% to 2% management fee across whatever tax qualified plans you're doing. So just don't even start with that part, okay? And also, like, I just don't think that's very helpful to the conversation. Like, what is that? How does that educate anybody about whole life insurance, like, and how it works, the benefits, et cetera, right? So it's just kind of a silly argument for me. So, anyways, let's see the reply here. From this person was, it's more transparent than UL, but still doesn't say in the policy. Again, that's because everything is net. So he wants it like in writing, like in black and white. This is the rate minus expenses, but that is what they do in a whole life illustration, because it's all net of fees, expenses, cost of insurance already anyways. So it doesn't break down cost of insurance. You don't need to. You don't need it to, because it's already net of cost of insurance. Right? You have to figure out those calculations within the illustration. No, you don't. I mean, I suppose you could if you want, but you either like the numbers net of all those fees or you don't. That's your call. But we don't need a full breakdown of everything if everything, like all the numbers are net anyways. Since most agents won't sell this unless it's a minimum of 10K per year, like Caleb's company, the take-home commission is still large by itself. I mean, the more a person puts in, the more the commission there will be, but it's still, when you're setting it up for high cash value, there's a huge hit in the commission. And when he's talking about the minimum of 10K per year, that's just to make sure that people are able to get the maximum amount of benefit from the policy. That's not a commission thing. Like if you talk to Caleb about that, he's not doing that for a minimum commission that he and his team makes or whatever. He's doing that because that's what's best for the client. I say the same thing on my channel. If you're not able to capitalize your policy enough, then you're probably not ready for it. You got a cash flow issue first. You need to be able to save enough money on a regular basis. It needs to be something that doesn't stress you out, that you can just do. You can put money into the policy without really thinking about it. Okay, that's why that minimum is there. It has nothing to do with the commission. It's about the what's best for the client. You might need to fix your cash flow first, start getting to the point where you're able to save money on a consistent basis, and then take out a policy. Because if you do this too early, yeah, it can absolutely backfire for sure. So if you're not ready for it, then it's not good. Let's see. large by itself. Also, lower commissions is lower base. That's correct, which is less life insurance to the family. So we're lowering the death benefit. Death benefit. That's kind of a half truth, though, because we typically put a term policy on top of the whole life policy to avoid what's called a modified endowment contract. We don't want to mech the policy because we'll lose the tax advantages. But yeah, we are lowering the base, the death benefit, at least up front. Sometimes I've got something on that, something else on that in a second, but usually we're putting a term life policy on top of the whole life anyways. So we're still getting a ton of death benefit. Not to mention, again, depending on the company that you work with, guys, I just did this with a client that I'm working with now. She had a 100% base policy sent to her, like an illustration. She hasn't purchased it yet, thank God. But it was set up 100% base, max commission to the agent. When I ran an illustration for her using one of the companies I'm contracted with, and we set it up for high cash value, we ended up with more death benefit in the very first year. There was an extra $3,000 of death benefit even when it was structured for high cash value. And it was mostly because I added that term policy on top of it. So again, this is just not true. I mean, I want to clarify. We do when you lower the base premium, you are lowering the death benefit, but it's usually made up for with, especially in the long run, because that death benefit is going to grow for the rest of your life, anyways. So yeah, the life insurance does need to be addressed, but I wouldn't say that's the biggest issue. There's ways around that, particularly adding the term policy. All right. Insurance comes on a hook for much less death benefit. I mean, in the beginning, but that thing's going to grow for the rest of their life. No one pushes and defends this product more than an agent, whatever. We already addressed that. Okay. So I'm basically just addressing, I already addressed this just in a couple of sentences here, but same thing here. Like they're already net of fees regarding the lower death benefit. You're normally going to add a term policy, et cetera, et cetera. All right. So he says, since it's a fixed product, when compared to a money market, it's $1 a share, and the prospectus tells me the interest rate, performance history, and expenses. I guess the illustration in whole life shows I'm negative for a number of years, and that's okay because they're transparent and ripping me off. This is probably the dumbest thing that he said. And my only response to this is like, so do you want life insurance for free? Are you saying that the life insurance company should give you life insurance for free? They shouldn't charge for that? Because this is just a really silly comparison. Because so like when I'm gonna go back full screen for a second. Let's have some fun with this part. Oftentimes, like when I talk about whole life insurance, dividend paying, custom design, mutually owned life insurance company, all that stuff. All right, it is very comparable to being an alternative savings vehicle. It's a very efficient savings vehicle, very similar to what you would get as far as like an internal rate of return. For example, what you would get with the money market bond is a really good bond alternative, high yield savings account, that type of thing. But it's still life insurance. Okay, so when people complain about like being negative for a number of years and they're ripping you off, no, you're not. You know what would be a ripoff is if I went to my bank and I said, I want to transfer money from my checking account to this new savings account that I just opened. And in so doing, let's say I transfer $10,000 and then immediately I only have $8,500 in my savings account and I'm not getting any benefit for that. Yeah, that's a ripoff. All right. But that's not what's happening with dividend paying whole life, because we're buying life insurance. It's not like your money is just disappearing or you're not getting anything for it. You're buying life insurance. You get the death benefit. That's why you're negative in the first few years, but you're going to hit break even. I mean, usually when these policies are set up, right, you break even in 4 to 7 years. So you're right back where you started as far as how much money you have access to in the form of cash value. But the entire time you have a really large death benefit. You have that financial protection for your family. You have an asset that's going to grow for you 3 to 5% net tax-free compound growth for the life of the policy. Name me a freaking checking, savings account, money market that's going to do all of that. It doesn't exist. So $1 share, you can't you can't make that that comparison where like if I put $1 in a money market, I should have $1 available in life insurance. No, you're buying life insurance, guys. So there's a cost to that. But here's the thing. One of my favorite parts about custom designed whole life is they get more and more efficient every single year as time goes on. What I mean by that is you put $1 in, your cash value increases by more than that dollar. So imagine you go up to an ATM, you're going to put $100 in, and you put the $100 in, you make your deposit, and then but you have $105 available to you in that account now. How long would you stand in front of there and put $100 bills in there? How many $100 bills would you want to put in it? As many as you could, right? And then the next year you put 100 in, and you have access to 110, and then 120, and it just keeps getting more and more efficient. That's what happens with dividend paying whole life. So there's a cost to it in the beginning, but this is not a short-term financial decision that we're making here, guys. This is a long-term financial decision. And when you look at the long-term benefits and how these things operate, it's absolutely worth it to have, we take a little bit of a hit in the beginning, but I wouldn't even, that's just kind of a bad way to put it, because we're buying life insurance. So, eventually that's going to come back to you, and you still have access to the majority of your money. If an emergency came up, an opportunity came up, whatever. I was able to take my first policy loan in 2 weeks after setting up my first policy. So I had access to the majority of my cash value. So just kind of a silly comparison. Anyways, let's continue. Let's see. And he said, it's clear I'm an agent, and my ego, can you guys see? Okay. My ego was hurt with the commission vacation. No, it's just misleading information. It's just a stupid thing to say about it. And you're thinking, if you don't like someone making a commission, don't ever buy a financial product, but you should be empathetic towards consumers. People have been hurt by agents. I absolutely agree with this. 100%. I see this on a regular basis, unfortunately, where, people are getting policies from people who have no idea what they're doing, or if they do, they are just working in their best interest, not their clients. And that is really sad. I absolutely have empathy for that. It's why I do what I do. It's a major part of why I started my channel, is to help people understand how these things are supposed to be set up, so you don't get ripped off with an awful, working with an awful agent and setting up an awful policy. So yeah, I mean, you do have to be careful, but that doesn't mean that dividend paying whole life is bad, or it's the timeshare of a financial product. No, dude, these things are really powerful when they're done right, when you work with somebody who knows what they're doing. IBC overfunded whole life savings alternative agents. Let's see. When I worked in policy services, I saw the impact. Don't become so obsessed. Okay, whatever. All right. I would say I'm obsessed with this because of how many benefits we get. I think they're incredibly powerful. They provide a really strong financial foundation in our lives. And I'm speaking from personal experience here, guys. I have 2 of my own policies that I've used on multiple occasions for multiple different uses in my life. And while I was using them, my money was still compounding in the policy. Plus, I had the financial protection for my family, etc. I just don't see how you beat it. Now, we don't compare it to like investments and stuff like that, but it's still a powerful financial foundation. That's kind of what I brought up right here. I asked him how the life insurance company is ripping you off if you're buying life insurance, because that's why you're negative in the first few years, because you're buying life insurance. That's when he said timeshare. It's the timeshare of financial products. It's not. It is. I would say it's the Swiss Army knife of financial products, because it solves so many problems within one financial product, guys. It's just incredible. All right. Let me see. I just got a couple of bullet points. I want to make sure I covered everything here. Locked in. Yeah. I did. So last thing I want to finish up with. All right. Hopefully this was helpful. If you guys have questions, drop down in the comments. If this was helpful, drop down in the comments. I would love to hear your feedback on this. It gives me an idea of what kind of content I need to continue to make to help you, help educate and give you guys the information that you need. So let me know what you think about this. But I do want to finish up with going through my policy here. So this is my first policy. All right, I just had my first policy anniversary. It was really cool. I made my second premium payment, and my policy is outperforming already. So I set my first policy up. The dividend was 5.2%. It's now 5.75%. So set it up at a really good time. And so here's my policy. This is what I was approved for. So I put $120,000 in the first year, and I had access to roughly $103,000 within the first 30 days in the form of cash value. And then that slowly came back to me over time throughout the year. I had access to about $110,000 close to the end of the year. All right, so still had access. Yes, I took a hit. I was negative in the first few years, but it's because I'm buying life insurance. And when we look at this from an infinite banking standpoint, we're setting up our own private banking system as well, where our money is going to continue to compound for the rest of our lives as long as we have the policies. Yet I'm able to use the money to build wealth like I normally would. My favorite way of doing that right now is private money lending. I'm about to do my second deal right now, so make sure you guys subscribe to follow along, because this stuff is just incredible. I'm able to borrow at 6 or 7%. I can lend it at 13% plus points. I'm now creating positive arbitrage right there, not in the policy, but in the opportunity that I'm taking advantage of, all the while my policy is still continuing to grow. The only cost of doing that is that little bit of simple interest you pay on the policy loan. Like, it's crazy. It's just like the bank's paying us 1% in a savings account and then lending it out at 4%. I'm literally replicating that exact process with this. So if I have to go negative for the first couple of years, I am totally okay with that, because it's a cost of doing business in my mind. It's kind of like if you start, like a lot of the times when people start businesses, you don't cash flow. You don't get it. You don't have profit for like a number of years. It takes a while to get back to break even and actually start making money. That's how I look at this, guys. It's like starting my own private banking business. I'm just using a whole life insurance policy in a very specific way for that. But so here's my net cash value. It's actually going to be more than that because my policy is outperforming already. Look at the amount of death benefit that I have here, guys. Like, could it be a little bit, could it be more if I didn't lower my base premium? Probably, but that's still a pretty significant amount of death benefit. And it just continues to grow. It drops off right here because the term policy expires, but it's still a good amount of death benefit. And you can always increase the amount of time you have for the term policy if you want that death benefit longer. But this is the last example I want to show you on my policy, where the efficiency part of it, where I put $1 in, but my cash value increases by $1.05, $1.10, $1.20, and on and on and on and on and on. Is your timeshare going to do this? I don't think so. Not even close. So, but like right here as an example, I put $25,000 in, and then my net cash value increases by how much, guys? $27,000. Okay, let's go to year 10. All right, this is where it really starts to get good. This is where the compounding, the compound interest part aspect of the policy really starts to take hold. Maybe not year 10, but it's getting more efficient. Years like 15 and 20 is where compound interest really starts to take off. But like, look at this. I put $24,395 in. My cash value increases by almost $40,000, guys. Does your timeshare do that? I don't think so. I mean, this is pretty freaking sweet. And I continue to put money into my banking system. That's how I look at this, as depositing money into my own private banking system versus like it being a bill, right? Because I have access to the majority of my money anyways. But like at 75, which you don't have to pay into these till you're 75. This is just how I set my first one up. But at 75, look at this. I've put in a total of roughly $1.07 million. Okay. But look how much cash value I have, guys. $2.8 million. That's more than twice as much as I put in. And it's just going to continue to grow for the rest of my life. I could turn this dividend right here. See this? Now, again, this is not guaranteed. Like, this is the non-guaranteed side because dividends are not guaranteed. This company has never missed a dividend payment for 121 years. All right, so I'm pretty confident they're going to continue to do so. But if I wanted to, I could turn this dividend right here into a tax-free supplemental retirement income stream if I wanted, because you change your dividend to paid in cash. What does that do? That now if I start taking money out of the policy, I now start to reduce my cost basis. And what's my internal rate of return at that point as I continue to pull money from the policy? Like, your internal rate of return can get really, really good with that. That's not why we set these up, but I'm trying to make a point about all the benefits that we get from this long term. You got to think about this long term, even though we can use the policies short term, like as soon as we set them up if we want to, but long term, these things, I haven't seen another financial product that solves so many problems within one product. Okay. And it still gives us access to our money if we have an emergency, if we have a business opportunity, whatever, investment opportunity. Like, I don't know what else exists that even comes close to this. So it's just a really, really strong financial foundation. It is absolutely not the timeshare of the financial products. You can think that. I don't care. Just at the end of the day, guys, my point of doing this stuff is to give you the facts, the information about how these things work. These things can be absolutely incredible if you are ready for it. You've got to be able to save money on a consistent basis. All right. It does not replace investments or anything like that. I believe we should be doing both. If you don't believe me, watch my interview I did with the father of the 401k, Ted Benna. I've had him on my channel, and we talked about this. And he owns tons of permanent whole life insurance, guys. It's a very interesting conversation. So anyways, I hope this was helpful. If you guys have questions, drop them down in the comment section below. Give me some feedback. I would love to hear your thoughts about this. All right. So I hope you guys are crushing it. I will talk to you in the next one. To your success. Matty Ice is out.